Hey guys, welcome back to the Wall Street Bull. Anthony here. I hope you're all doing well and staying safe out there. Big shout out and thank you to every single one of you who have subscribed to the channel. I really appreciate it. Thank you very much. If you're new to the channel, please make sure you smash the subscribe button down there and turn on that little bell notification as well. Because as you can see right here, I love documenting my journey with investing, being through cryptos, dividend stocks, growth stocks, talking about passive income, building financial freedom. And yes, my goal at the end of the day is to build generational wealth. So come along this incredible journey. We're just getting started. Also, if you can give this video a thumbs up, watch it straight through, would really help me push this channel out to a lot more people, and I would appreciate it. All right, let's get straight into a little disclaimer. I am not a financial advisor. Please do your own research and due diligence. It's very important with this stuff. I don't want to see anyone get financially hurt. Me and my golden rule is only invest what I can afford to lose. Yes, we don't like to lose. We can lose money like that, especially in cryptos and some stocks. So please be careful, do your own research. Don't take what I say as financial advice in these videos. All right, formalities are out of the way. Straight to the community tab this morning. Compound interest is the eighth wonder of the world. He who understands it earns it, and he who doesn't pays it. Straight out. 85% of you agree with me on that one. So this is a dividend stock video update today because I am invested in dividend paying stocks for passive income. I've been doing it now for a little over 3 years and it's been incredible. I'm seeing some incredible returns and I'm earning money in my sleep. Literally almost every single day I'm getting paid dividends and it's incredible. So I'm going to get into my app. This is what I use, Stake. Please feel free to use the referral link below. You can get a stock free in Dropbox, GoPro or Nike, and I can safely say I've had a lot of stocks in GoPro, a couple in Dropbox obviously, and yes, I've received one in Nike. So thank you to those of you who have subscribed using that link below. Let's get straight into it, guys. This is my portfolio. Stake is available in a few other countries around the world. I'm not sure about the United States. I don't think so it is just yet, but it's very similar to like Robinhood. So you can't really short on this app as well, which is really annoying. I hope they do bring that in so you can just sort of do some puts and calls as well. Hopefully that comes about. But anyway, I'm sitting on $34,437.70 USD. This is in US dollars. And I do have my dividend tracking app as well, so I'm going to go through that. But it's incredible to see where this has come from. I literally started with a few $100s, and to now see it at 34,000 US dollars is pretty incredible, guys. It really is, and it's taken a long time. So this is my portfolio. Obviously, I have my favorite dividend-paying stocks. And I've received some really nice dividends in the last couple of weeks. Obviously, my biggest position is with ExxonMobil. That is at $74 a share right now. And in the last year alone, it has had a 61% return, guys. Because, I mean, during the situation around the world that hit in 2020, basically the entire energy sector crashed, especially with oil stocks. They literally couldn't give oil away. It was literally priced under $0 for a barrel of oil, which is incredible. The entire market crashed. Now, if I go to 2020, you can clearly see what happened there. What happened in the oil sector right there. I mean, it got down to $36 a share. Basically, I dollar cost average into my dividend paying stocks every single week. I've been aiming to try and invest $1,000 a week. If I can, it's a lot of money in Australian dollars, obviously buying US dollars. But again, dollar cost averaging. I'm investing at every point, no matter what the price is doing. And I can safely say I've had an incredible return. In the last, obviously, 2 years, I've had a 51% return on my money, which is really nice. $2,582.76. That is incredible. I'm sitting on 102 shares of ExxonMobil, and it is paying a dividend yield of 4.70%, which is my ideal range. Between 2 to 5 is perfect. Anything above that gets a bit risky. Obviously, my other big dividend payers here are SPHD, which is an ETF as well. I'm going to scroll down to this because I love it. It pays every single month, which is really nice. It is at $44 a share right now, and in the last year it is up 13%. So again, I've made 13% of my money, which is really nice. I've got $4,458 USD in my position, 100 shares of SPHD, and I've got $536 in returns, 13%. That's incredible. The dividend yield is at 3.18%. SPHD is an ETF, so basically, a basket of stocks. The S&P 500, the top 500 companies, it picks the top 50 of those companies. So if you go down here in the description here, so check this out. The investment seeks investment results that generally correspond before fees and expenses to the price of the yield of the S&P 500. Low volatility, high dividend index. The fund generally invests at least 90% of its total assets in securities that comprise of underlying index. S&P Dow Jones Indices LLC complies and maintains and calculates the underlying index, which compose the 50 securities in the S&P 500 index that historically have provided high dividend yields with low volatility, which is nice. And again, they pay every single month at the end of the month. So at the end of the month, I get a dividend check, which is really lovely. And I'll show you that in a second as well. SPHD. My other one play here is obviously AT&T. Now, there's a lot out there with AT&T coming out with, their partnerships in terms of, Warner Brothers and Discovery. And there is going to be a bit of a dividend stock cut, or, they're going to reduce their dividends because of this merger that's happening this year. But again, I've seen some incredible predictions here with AT&T, and I think it's an incredibly undervalued stock. Their cash flow is awesome as well. They are a cash generating machine, and I think the technology sector in terms of telecommunications, internet, pay TV like cable or whatever you want to call it in the United States is going to be big, and it's only going to continue growing as well. But $24 a share, I haven't had a great return on this, but the dividend yield is at 7.86%. It is incredibly high, but I think over time, once this merger happens, with HBO, I think we'll see a positive outcome for AT&T as well. So I'm sitting on 57 shares of that. I've had a negative 13%, and I've got equity in it of $1,399 there. But again, it is a 60% buy on the analysts. So can't complain about that, guys. And you can see the revenue that's been generated since 2020, Q1 2021, Q2, and now Q3 in 2021 as well. So again, I think AT&T is a really good buy at the moment. The other one I've been investing in as well is obviously Intel. Intel Corporation, microchips. The world is only growing more of a need for microchips as well. Intel is incredibly undervalued at the moment. They are getting into the crypto space with Bitcoin mining efficient chips. So I think this is going to be a really good play as well. And they do pay a nice dividend of 2.73%, which is in my perfect and ideal range. In the last year alone, it's had a negative 6.38%, which again, I like to buy companies that are, sort of not popular in a sense where, like people like to buy the hype, the AMCs or the GMEs, the GameStops and all that kind of stuff. I'm sort of, especially with Tesla as well. But again, I like to dollar cost average into these companies and build my positions when they're not, being hyped in the media and all that stuff. And I think Intel has got a long way to go, and it has had the majority of the market of microchips alongside AMD and I believe it's NVIDIA. So Intel's still up there in terms of the the market share in a sense. But again, I've got now 6.7 shares of that. My total equity is $346. So I am building up my position in Intel as well. This is a 67% buy. And again, the revenue has been quite good here in 2020, 2021, up to 2023 and Q3. So there's been a significant amount of trades as well, 16,700. So Intel is one that I'm investing in. My other big position here, guys, is obviously with EPD. Now, if I pull that up here, this is an incredible dividend-paying company as well in the gas and midstream company. So I obviously done a lot of research on this, guys. So Enterprise Products Partners is a provider of midstream energy services. So gas, crude oil, petrochemicals, and refined products in North America as well. The company segment includes NGL pipeline services, crude oil pipelines and services, natural gas pipelines, petrochemical and refined product services. The company midstream operations include natural gas gathering, treating, processing, transportation, and storage. So that's pretty self-explanatory. But again, it's paying a dividend of 7.69%. It is on the higher scale here, guys. But again, it's been a beautiful company to invest in. I've had some really nice dividends, and it has had a 1% return on the day. In the last year, it has had a 15% return, and in the last 3 years, it's down 13%. But guys, in the last year, energies sector is been booming, so it's really good as well. And obviously my other big one here is Tesla, but this is not a dividend paying stock, but I've seen some insane returns on this, guys. $937 a share. My average buy-in is at $466 a share. I've had a 100% return, so I've made 100% on my money. Cannot complain about that. $3,800 there, and I've got 4 shares of Tesla. So again, it's not a dividend pay, but I think the entire electric vehicle sector is going to be a mega play this, in the future. And obviously the other one I've been buying into is Ford as well, just to put that out there, because I think Ford is going to come out as a big competitor to Tesla. And, with the energy with the electric vehicles as well. Ford's going to be producing a lot of electrical vehicles, Mustangs, the SUVs, the Ford pickup trucks as well. So this is a good play, and it does pay a dividend of 2%. Now I'm kicking myself about Ford because in 2020, The share price plummeted. Look at this. I should have bought it, and I'm spewing I didn't. $5 a share for Ford. I had been looking at it obviously during that time, and I wish I had bought it. They did cut their dividend. They stopped their dividend being paid out to investors, obviously to protect the company itself and reinvest back into the company. But its return has been absolutely astronomical, guys. 128% return in Ford. I think this is incredibly undervalued right now at $19 a share. And again, the strategist is 25% buy, but I think this is a really good play as well. But do your own research. But Ford is definitely one that I'm adding more of. I've got a position of 4.7 shares, just dollar cost averaging into it, obviously. But that's pretty much it. My other big positions here, obviously, are in SPCE, so space, which is Virgin Galactic. I think space travel is going to be a big, market very soon, guys, in the future. $8 a share. My average buying is $25, so I've just been dollar cost averaging into it. And I've got 50 shares of SPCE. And my other one here is NEO. And I bought into this at a really good price, by the way. And these are growth stocks. I've got 31 shares of NEO. My average buying is at $16. So I have made some nice returns of 37% on my money. Can't complain about that, guys. But in the last year, it's down 62%. I think NEO is another big player, like towards Tesla in China as well. So NEO is another good one as well. But that's pretty much it in terms of my portfolio. In terms of dividends that I have been paid, let's just go here to January this year because it's been quite nice, and this is why I love it. If you go to, let's go to the 3rd of January here, this is when it all starts. Obviously, gain 75 cents, OSXQ is 22 cents, PGX 6 cents, QQQ is obviously the NASDAQ there, 11 cents, CNI, Canadian, I think that's Canadian National Railway, I have to double check that, 7 cents, SJR is 4 cents, LEND is 9 cents, LTC is 5 cents, BAC 21 cents, SPHD is $13. I receive that now every single month, and it is growing, compounding, which is an 8th wonder of the world. What else have we got here, guys? We've got BEP dividend 1 cent. I've got 3 dividends being paid out here. I'm not sure why. Anyway, let's have a look here. GPC, I think that's general parts code, 9 cents. KMB is at $4.04. Kimberly-Clark is an incredible company. I was going to say project, but a company, because it is forever going to be needed. Kimberly-Clark provides a lot of sanitary products, cleaning, that kind of stuff. Kimberly-Clark's an incredible dividend payer. IMO's oil, 78 cents. I deposited, again, $354. I bought some more AT&T, Iron Mountain here, 48 cents. PEP's Pepsi, 66 cents. EMN, 10 cents. MO's Ultra Group, tobacco, wine. Good company here, guys, $1.39. Philip Morris, $3.69. AGNC, $1.54. Again, I put some more money in. I bought WBA, Walgreen Boots Alliance here, Intel, AT&T, EPD, BEN, 14 cents. Main Street Capital, $1.28. O Realty is a real estate investment trust, a REIT, pays me $8. That I just invested in that again today. Really nice dividend pay, and it pays every month. WPC is 23 cents. EPR, 4 cents. Stag is an industrial REIT, so industrial real estate. That pays me $3.60. Again, I put more money in on the 19th. I got paid a dividend from PBA, which is gas pipelines, 86 cents. VTR, 7 cents. Prospect Capital, $6.27. And again, I deposited more money last night, and I bought KMB, Intel, EPD, VYM, which is an index fund of the S&P 500, Vanguard, one of the biggest there, and O Realty as well. That's pretty much it in terms of my purchases there and dividends being paid out this year in 2020. If I go to my dividend tracking app, I'm sitting at $1,812 a year in passive income. Monthly is $151 a month, which is really nice. My daily is $4.97 a day. It's really nice to receive that every single day. That's the average, which is really good. My average yield is at 4.61%, so I can't complain about that. It's really nice. It's a good average. Also, by the way, I'm not sponsored by this app. It is available on iOS. I'm not sure if it's on Android yet, but I've been using this for ages. It's really nice to track your dividends. ExxonMobil are my top payers. $507, SPHD, EPD, AT&T, O Realty, Prospect Capital, VYM, Stag, KMB. I could go on for ages here, guys, but you can see the amounts here. Exxon pays me $507, SPHD $230 a year, EPD pays me $169 a year, AT&T $168, O Realty $145, Prospect Capital $105. That's like finance for early companies. It's a finance company, pays every month as well. VYM is an index fund, $103. Stag Industrial REIT $61, KMB, Kimberly-Clark $34. They're my top dividend payers. I've got a goal of $20,000 a year in dividend income. I've got 9% of that. It has been quite hard because the US dollar is expensive. 28% is from energies and minerals companies. That's basically my portfolio. Dividends receivable this month is $103, so that's going to be really nice. Here's my portfolio value in Australian dollars, $48,303.93. That is beautiful. $9,000 in total returns in profits. Can't complain about that. 23%. That's incredible as well. Love watching my money grow. These are all the companies here that I'm investing in. You can see on the screen. And if I go straight down here, this is my favorite part about compounding. In 10 years, if I just reinvested the dividends, didn't put any more of my money, the portfolio would be worth $83,000. It would pay me $5,736 a year, which is beautiful. And the best thing about this is how Warren Buffett and all these big investors made all their money over time. The portfolio would be worth in 20 years $252,000, and it would pay me $28,000 a year, completely passive. That is a lot of money every single year, and it continues to grow and compound with reinvested dividends. So obviously you need to reinvest those dividends. You can't pull them out. You need to put it back into your portfolio, into the stocks that pay you. And it's just incredible to see the power of compounding. This is what I was putting up on my YouTube channel anyway. So that's pretty much it in terms of my portfolio. These are what my dividends are being paid every month. On average, I'm $144 a month. I have my low months as well. April, July, October, and January is a low month, so I need to build those up. My biggest dividend paying month is going to be December, obviously this year, $241 in dividends. If I go here, the biggest dividend pay is ExxonMobil at $124 that month, so that's going to be incredible as well. You can clearly see the power of investing here, guys, how much it actually adds up over time. Just snowballs, and that's why I love it. Another one here in December is actually VYM. So that's pretty much it in terms of my dividend portfolio. I am dollar cost averaging into this every week and trying to invest $1,000 every single week. It's a lot of money, and it turns out to be about $700 USD. So again, it's incredible to see the growth of this. I mean, I started out literally with $200 or $300 in this, and I took a screenshot of my first investment. So to see this now at $48,000, this is the power of investing. I love it. Let me know in the comments below, are you a dividend investor? Let's talk about it in the comments, all right? Peace, bye.